Ladies and gentlemen, we are long S&P, long on S&P from 2081, currently at reversal zone at 2083.75 and continue climbing. Why in the world did I take long? Because I know extremely well. We are at reversal zone, bearish trend, very tired. But until buyers will break through this level, bearish trend remains major, and this level remains the key. S&P currently at 2084 and a quarter, reminding you how crucial Fibonacci levels are. So, will S&P succeed and break through this level, or will it continue finding selling pressure? Caution. That remains to be seen. And here is oil. Drastically different structure since yesterday. Oil dancing between minor trends. Oil is slow and steady, waiting for the news. News in 18 minutes. So, on daily chart, oil is showing to us extremely clearly that buyers still have plenty of space to the upside, as only 20% of the time trend ends at decision point 2. So, we know extremely well we will never enter into Fibonacci level. Just to remind you what happened on S&P this morning at the market open. And speaking of the devil, S&P finding sellers from reversal zone. 1, 2 ticks to my trail. So, oil is a focus very shortly because the news in 15 minutes. My bias at this level remains bearish, reminding you our magnificent short trade on oil reached the end of the minor trend. It never made it very far. And here is oil back up again at these levels, which means at this level my bias remains bearish. Oil is taking its sweet time. And what do we need for oil to do in order for us to buy? 2 things. Either collapse to the downside, which would be ideal, or buy outside of this level. But what is the most important thing? The power of the sellers next from this level and the power of the buyers from this level. And that's the power of the price and Fibonacci levels, as we will witness that finally trend will decide which trend is major, as currently when it comes to hourly chart both trends are minor. The dance is in, showing you. If you took Alpha Wave Trader Friday Fibonacci class, you are ahead of the game. You know exactly how to identify these levels, and you know exactly how to identify these settings. In the meantime, S&P reminded you importance of reversal zone. How did we know that? Price spelled it out the moment we took that trade. We are out of our long on S&P 3.25 points later, waiting for the news on oil. Again, until S&P will break through this level, sellers remain the charge. It's only bullish correction when it comes to hourly. When it comes to day trading, 3 points on S&P are not to be sneezed at. One contract, $50. 3.5 points is $175. Multiply that by 5 or multiply that by 10 lots, which you can easily do if you know the rules. And if you constantly add 1 lot size once you go live after the graduation of the course. I have only 2 spots left for the bootcamp. I expect it to be filled by Friday. So, Next, my focus on oil. Oil continues very, very slow, but it's reminding you already as sellers are stepping in everywhere. Respect and adore the end of the minor trend. Don't ever buy into it. Sellers are stepping in. This is one of the most powerful charts of all times. A short on oil from 106 had been spelled out by the price since 2011. This short currently at reversal levels. What are you witnessing when it comes to reversal levels? S&P is picking up this steam, giving us worthless bullish corrections. If this level is broken, bullish trend is in charge. Oil is doing the same thing for the last 3 months on monthly chart. Only bullish corrections. When will buyers pick up this steam? All of this had been spelled out for the last year. Projections that oil will collapse to 42. Nothing had been touched since last year, and oil reached 42 last week. So will oil collapse further to 40? How magical is price? Whatever I demonstrate on very short time frames, exact same formula you use on monthly, even yearly charts if you are a position trader. Exact same chart that I had shown you time and time again on euro, that I look on euro daily, all spelled out by the price since long time ago. So here we go. Will the sellers on oil do the same thing? When I said short, short, short oil, oil gave you perfect opportunity at the bid open. We took larger time frame short trade. If you took my Fibonacci trading bootcamp last time, you also enjoyed that collapse on oil. Oil found buyers since overnight session at the end of the minor trend. So, what do we need? We need for oil to make up its mind. That's what we're monitoring and waiting for. Knowing extremely well, 4 minutes from now we start seeing extreme volatility. So let's go straight to Instant Trader's news source. Let's see what we're expecting on oil. Plus 5.5. Oil news are drastically opposite than regular news. Bigger the number, more negative the news. More supply we have, more collapse on oil we should expect. Again, when it comes to day trading, both trends are minor, bullish and bearish, and fight for their life. We have 50% buyers and 50% sellers. One of these levels will be broken, and then the power will begin. Until then, the chop and the flop will continue. So, and again, reminder, daily chart is telling us we have plenty of space to the upside, as oil reached only decision point 2 on daily. Only 20% of the time trend ends at this level. 80% chance oil will continue drastically higher. But we need a push to the downside or break outside of this level, as we will never buy into the end of the minor trend. Oil news at any moment. Showtime. Never boring, I promise. News on oil is in. Is anybody surprised? Oil collapsed. Oh, not at all. Price could not be more clear. As I said, my bias at this level is bearish. Go down, baby. We allow oil to settle down, down, down. Pay attention. I don't care about what news is. All I care is the price confirmed everything we discussed. Correct? Respect Fibonacci levels. It's all preset since last Friday. Where we expecting selling pressure from? So now let's take a look on the news. Shocker! We have an oversupply on oil, which means nothing. The only thing it means is volatility is in. Which trend will win? Will it be buyers that will finally break through this level, or will it be sellers? The only reason I respect the news is due to volatility. Everything we expected played out by a tick. Has everything preset in price far in advance. We can't buy oil near here. It's not going to happen. If you're buying oil near here, your success rate is less than 20%. We need oil to go down as low as possible or break through this level. Those are the only options we have right now, as we are not buying oil here. Go down, baby, you can do it. Oil reminded you the importance of Fibonacci levels. So what are we monitoring currently? We're monitoring the response on oil. Will buyers be able to defeat this selling power? If not, oil collapsing drastically lower levels. So caution. Response on oil next is crucial. Again, reminding you, know what not to enter into. If bearish trend is measured, this level is broken. S&P, as I warned you, when buyers were not able to break through this level, S&P heading further down. Shorting into reversal level is not a good idea. Only if rules are met, I would take a trade, and if I take long, it will remain a counter trend trade for one simple reason: reversal zone bias will forever remain bullish. 3¼ points, picture perfect reminder. Know what not to short into. Next, on hourly chart, currently playing out on very small time frame. Clear? Formula remains the same. It doesn't matter if you trade monthly, it doesn't matter if you trade hourly. We will find out very shortly if sellers mean serious business. Are they capable to break through this level, or will buyers continue with vengeance? This is decision moment. Sellers are picking up this steam. The end of the minor trend to the upside not broken. Who the heck cares about the news? Who cares if news is bullish or news is bearish? It's all in the price. It's all in Fibonacci levels so far in advance. 2 bullish trades. Second trade on S&P this morning. 1 point in. Trade on oil. So far, 13 ticks are in. If oil blasting through 47.90, my trade migrates into hourly chart. Who cares about bearish news? No one. We knew where not to enter into. We knew where not to buy. We allowed oil to settle down. We saw extremely clearly short trade we chose not to take because the ratios were junk. My bias on S&P entire morning remained bullish. I know extremely well shorting into reversal zone, the worst idea ever. Bias only bullish. Sellers are exhausted. Buyers picking up this steam on oil. Price is magic. Go, baby, you can do it. Break through 47.90. S&P currently reaching reversal zone. Remember what happens when price comes to reversal zone. So levels, mesmerizing. Many years later, still pinching myself daily. Will S&P be able to do the same thing? Buyers picking up this steam. Buyers means serious business. Is that clear? Moving my stop at 20.80.50. Reversal zone, never ever to be disrespected. Magic. Can oil break through reversal zone? Baby, you can do it. Adjust your trail. Fundamentals are worthless. Showtime! I said to you, daily chart could not be more clear. Look to buy, buy, buy. We have tons of space to the upside, which means what? My bias remained bullish. I wanted to see what oil will do here because daily chart said oil heading up and up and up. But we know this is day trading room. This remains an obstacle. Well, buyers picking up this theme as we knew they would from daily chart. 47.90 is huge. Once we break through 47.90, my trade moved into hourly chart. Here we are, long from 47.52, currently at 47.90. Every single person here trades different lot size. Make choices and decisions for scaling out and profit levels appropriate to you and your account size. Clear? S&P at reversal zone as well. No time attached to this chart whatsoever. Chart is magic. On S&P we are another 3 points. Let's update the results, shall we? 2 trades reached reversal levels. Here's what we accomplished on S&P this month. 39 trades, 36 positive. Clear? 26 of those trades made it to reversal zone, reminding you the importance of moving your stop outside of break-even when price comes to decision point 2. These trades that made it to decision point 1 were counter trend trades that I took to demonstrate to my students what happens when you counter trend trade. The second trade on S&P drastically more conservative. We discussed with my students in detail and will do so again after the close of the trading room. This was trade number 40 on oil. 35 positive. Clear? 22 trades blasted to reversal zone and further out, again reminding you the importance of moving your stop outside of decision point 2 and trailing carefully. So we are remaining in both trades on S&P and oil, reminding you time and time again, respect and adore reversal levels. Know when to buy and know when not to short into. Again, when S&P will break through this level, bullish trend is major on hourly. At this level, my bias will forever remain bullish. On oil, we knew what not to buy into. Short trade gave us junky ratios. I waited knowing extremely well if I will buy, I have to buy very, very low. But my trade currently at reversal zone. Will hourly be able to break through this level or will sellers step in with vengeance? Bam! Sellers are trying. That magnificent and that simple. Ooh. Oil at 48, ladies and gentlemen, I am trailing on hourly chart. Is that clear? Buyers picking up this theme. First levels are first. Expect 48.60 to be a huge obstacle. Alphys, let's talk. Okie dokie, here we are, traders. 60 ticks later, trading against the news again and again and again. My trade migrated into hourly chart because my trade broke through all of my targets. S&P also blasted through all of my targets, trailing S&P moving into hourly chart. Happy Wednesday, everybody. We are out of S&P. Our trail is reached. We are at any moment will be out of oil. Clear, trail on oil is not reached yet. So 4.5 points on S&P, we are out, and we are out on oil. Clear. 60 ticks on oil. We are out. Selling pressure on S&P started from reversal zone. We've been shorting here and we've been shorting here. Shorting on S&P last opportunity was from here. By the time we came to the trading room, S&P was at reversal level, giving us only bullish correction. Is that clear? 4-5 points each. And as I warned my students and we discussed in detail and I continued emphasizing to you, we are not out of the woods. This level was not broken to the upside. Sellers remain in charge when it comes to larger time frame. What did you witness? Sellers stepped in with vengeance. So let's close with reminder. You witnessed the entire week, the entire 3 days, the very dangerous minor trend formations on oil. Correct? Finally, oil showing to us it will be breaking this level potentially very, very shortly. But there is no reason for us to sit here, as we know extremely well. We can't buy into this level, as we already took advantage from here. And we would never short oil right now. Formations are drastically different. We knew extremely well the short trade on oil reached this level, and right now there is nothing for us to do. You know the rules, you know what to do. You don't, you have no idea what to do. No trade is taken unless rules are met. Again, I expect oil to break through this level and to continue further up. 49.82. Potentially 51.70. Why? For one simple reason. Oil Daily told me so a long time ago, but first step is first, as decision point 2 must be broken. It's broken, oil heading to 50. That's when it's gonna get very interesting, when reversal levels on daily are reached. If daily chart breaking through these levels, that's when it's getting more interesting, as bullish rally will transform into weekly chart. Until that happens, on monthly chart, it's worthless, bullish correction. And that's the magic of the price. Know your levels and know what reversal zone means. Don't ever buy into Fibonacci levels. Trade only in between. So if you bought oil based on alpha wave trader rules, you bought it drastically lower. But you would never buy near. But the reason why I'm saying more than likely oil heading to here is because only 20% of the time trend would end on this level on oil long term. Exact same level that S&P struggled against this morning. As I warned you, sellers remained in charge. And as I'm warning you on S&P, price is heading further down, 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 drastically lower. But currently S&P at the end of the minor trend. Everything is very, very tentative, as we will discuss with students in details. Again, only 2 spaces left in the bootcamp. I expect it to be filled by Friday. Friday is a huge, huge, huge Fibonacci class. Trading room is closed on Fridays. Have a marvelous afternoon. Look forward to seeing you tomorrow morning. Alphys, let's go into the trade.